For everyone who is on the call, this is the Monday, July 19th, 2021 Finance Committee meeting of the City Council. I would advise everybody it's probably a 45-minute to 1 hour session of the Finance Committee before we start with the City Council. So we'll probably have a short break of a few minutes in between, maybe 5 minutes between the end of this meeting and the beginning of the City Council meeting. I also should read this notice. Please be advised that all of the Finance Committee members will be remotely attending this meeting by electronic means in compliance with the recent amendments in the Open Meetings Act. The chair of the City Council Finance Committee has determined it is not prudent or practical to conduct an in-person meeting due to the COVID-19 pandemic, and it is not feasible to have the committee members and members of the public physically present at a meeting due to the pandemic disaster. The city will be providing members of the public with various opportunities to watch or attend this meeting, as well as provide public comment at the meeting. For example, members can participate remotely in the meeting by following the public audience link, which will provide both video and audio means to attend the meeting. To start the meeting, Director Holler, would you take the roll, please?
Certainly, Mayor Panelion.
Here.
Chairman Morris.
Here.
Alderman Karras.
Here.
Alderman Rummel.
Here.
Alderman Oates.
No.
Alderman Preschlack.
Here.
Alderman Gashgarian.
Here.
Alderman Bushman.
Here.
Alderman Weber.
Here.
Mr. Chairman, you have a quorum.
Very good, thank you. The first item is consideration of minutes from the Finance Committee held on April 19th, 2021. Any questions or revisions to those minutes? If not, could I have a motion to approve the minutes? Second?
Second.
Now roll call, Betty. Or excuse me, Director Holler, a roll call.
Mayor Panelion.
Aye.
Chairman Morris.
Aye.
Alderman Karras.
Aye, excuse me.
Alderman Rummel.
Aye.
Alderman Notes.
Aye.
Alderman Preschlack.
Aye.
Alderman Gashgarian.
Aye.
Alderman Bushman.
Aye.
And Alderman Weber.
Aye.
It's approved unanimously.
Thank you. We're going to have a slight change to the order of the agenda so that the fire department presentation on the pension fund can go earlier in the agenda, so that one of the fire department members, Mike Mount, can attend, so that he won't have to leave if there's a call to jump on the fire truck. So Mary Tomanek, if you are on the phone or on the call, we'd like to turn it over to you and Fireman Mike Mount for the presentation.
Hello, Chairman Morris. I'm here.
Hi.
Hi, pleasure to be here. Thank you.
You bet. Please go ahead. Hi, Mike.
Great, thank you. If you could turn to the slide after this one. Wonderful. So members of the committee, Mary Tomanek, Greystone Consulting. I am the consultant advisor for the Fire Pension Fund. And I'm happy to report that the fiscal year ending April 30th was just a terrific year for the Fire Pension Fund. We had a little help from the markets and the stimulus, if you will, but the returns came in slightly greater than 28% net of all fees. And this brings the 5-year trailing performance to 11.22% annualized, and the 7-year to 8.88%. So we're very pleased with the results because we utilize a diversified approach to the strategy of the investment portfolio. It's one that I would call a moderate strategy where we avoid taking excessive risk. And this is what's in the investment policy. If you look over to the right side, you can see that the assets are, as of the end of April, were just a little bit under 49 million, with a 66% allocation to equities, comprised entirely of mutual funds, and then a 34% allocation to fixed income, which is a combination of treasury and corporate securities. The annual income on the portfolio, which we use to offset the monthly benefit payments, is running around 730,000. So it's a significant contribution to the cash flow for the fund. So it was a great year. Again, a very moderate approach. We have been experiencing some volatility in the market. Today it was down over 700 points, if you will. If we go to the next page, we can take a look at some of the things that we look at when we advise the board members for the Fire Pension Fund. It's broadly a number of economic factors, but one of the things that we certainly keep an eye on are earnings revisions and earnings expectations. And you can see what's been driving 5 consecutive quarters now of returns for the S&P 500, which have been greater than 5%. These are fabulous earnings expectations. The economic data overall is still strong. We're at a slightly slower rate of change, but the rate of change that we were at coming out of the pandemic was something that, was certainly not sustainable forever, as much as we would like that. But that being said, we're still experiencing strong economic data. And the last time we've had these types of returns with that 5% number greater for the past 5 quarters was in the 1940s, actually 1945. So truly extraordinary times. If you go to the next page, at the end of the day, we think we have actually pulled forward returns. I mean, to be able to be here telling you that the fund earned 28% last year is just phenomenal. But we think we're kind of borrowing from the future, if you will, and would not expect to be sitting here a year from now and telling you the same thing. That being said, we think we're going to experience more volatility like what we've had on days like today in the stock market as well as the bond market. That will leave us at the end of the year pretty close to where we are right now with the S&P 500 as well as many of the global indices. The one number on here that we are expecting that impacts the smaller allocation of the portfolio is an increase in interest rates. So we've had a pretty sharp decline over the past month or so in the 10-year. And just back in March, we were running a 174% yield. And today we got down to 118. So we do think that these rates are going to drift up. But you have a manager, it's a separately managed account for the fixed income portfolio, and they're able to manage the quality of the portfolio as well as the duration to navigate through these volatile times. So I think you're in good hands. I know some of the other topics that will be coming up is the transition to the consolidated fund. And we think that we're prepared well to send the assets over when that time comes. So I'll stop there and see if there are any questions in terms of the returns for the last fiscal year or the allocations or our expectations.
Sure. Questions from the committee?
Yeah, hi, so Chairman Morris, I have a question. So Mary, so returns are one side of the coin. I'm just kind of curious if you have risk-adjusted perspective on the portfolio's performance over time, either with an annualized standard deviation, or if you have a Sharpe ratio, because I think the risk exposure is much different than the market. So it's kind of apples and oranges. And I just wish you could comment on that a little bit.
Well, I don't have that data with me tonight, but I can tell you one of the things that we look at with the actively managed equity mutual funds is to take a look at downside capture. So that's not the exact number you were looking for, but I can tell you that 7 out of the 8 mutual funds have had very positive downside capture relative to the market. So it's something we do factor in. We also have an alternative strategy that is a covered call writing strategy. So that's in place, and that has exhibited outperformance in the downside. And then the other way we address that, Alderman, is by some of the active funds that we have. Like this year, we increased the allocation to a fund called Parnassus because they have more flexibility to raise cash within the portfolio. So we've reduced some of our passive allocation and gone to more of an active allocation in the equity portfolio as a risk reduction metric.
No, thanks. That's great. I just think it's important concept because you could look at the returns and go, well, it's just at market, but it's at a much lower and different risk profile. And I think that makes those returns that much more attractive. And so I would just, anytime we talk about returns, I think we have to talk about risk exposure. And if you can quantify the annualized standard deviation over time, I think that's an important factor. And a Sharpe ratio is a commonly used risk adjusted, kind of metric that everybody uses. And I think it's important for us to understand, both sides. So I appreciate your, potentially doing that in the future and your response tonight. So thank you.
Absolutely, and we'll follow up with that data.
Alderman Bushman?
If I may, you talked about the performance, and it's always good news to see those sort of numbers. In your early slide, you compared it to the total fund index. I'm wondering if you could expand on what the fund indexes you use to compare your performance to.
Right, so that is an index that matches the asset allocation for the fund, and it is the rebalancing of the index is done on an annual basis. And as far as what that data exactly is, I can also forward that to you, but
I was wondering, like the equity index, does that use one of the standard, the S&P 500 or the Russell 3000, or is it something other that you're using to compare your performance to?
Right, I believe it is the S&P 500, and I can also forward that information to you. Let's see. I don't have it in front of me right now, but I can absolutely.
We assume fairly standard indexes for the equities and the bond side of the equation.
Correct.
Okay.
Other questions? Mike, do you have any comments from the fire department?
Hi, thanks for having me and welcome everybody. No, it's been, the only comments I would have, Alderman, is it's been great, obviously working with Mary. She's helped us tremendously over the time even I've been on. Obviously seeing the numbers the way it's been the last few years, up and down, has been great. And then obviously as we prepare for the transition, obviously we want to give them the best slice of cake that we can. And just so everybody is aware with that, our transition date that has come from the State Investment Fire Board is going to be by November 1st of this year. There's a lot of details that we still have to work out. We have a quarterly meeting 3 days from now, this coming Thursday, where there'll be different, I'm trying to pull these up here real quick, different notice of transfer date exhibits that we have to approve and all that. The only question that's still left out there is an actual cash flow for when we pay out our annuitants on a monthly basis. So as this information comes in, we'll continue to keep Elizabeth in the loop, which in turn will keep you guys in the loop. And I think we're all, obviously everybody has the best of intentions, but we're all kind of learning together while this process gets put together.
Very good. Any other comments? I guess, Mary, I hope we have a chance to have you on at least one more time before the transition, because you've been doing this for quite a number of years and you've done a tremendous job. So we'd certainly like to thank you before this is completed. So
Can I make a couple of quick comments?
sure.
Number one, about a year ago, and we'll talk about this later on, we made a decision to allocate. That wasn't a year ago, actually. It was, well, let's see. It must have been about a year ago, maybe a little later in the year, to allocate some of our surplus, which we'll be talking about this year's surplus, to the police and fire pension plans. And I believe, if I remember correctly, we put an extra $500,000 into each plan. And that turned out to be an extraordinarily good decision because we earned, 28% or something like that on those dollars. With the market where it is today, very different calculus, but I just thought I'd point that out. So congratulations to the council for having the foresight to do that. I don't know where this leaves our funded ratios for the fire plan.
We'll find out
Hopefully it's
later.
accelerated our path toward the break even and getting on the flat line.
Yeah, we can talk about that. Elizabeth can talk about that a little bit later, but we have to wait till the actuary completes their assessment.
So, but yeah, I mean, this turned out to be a very good move, and I think it's stood us in good stead and helped us along the path to what I refer to as the flat line. So,
yeah.
Yeah, and again, I'd like to thank everybody who's been involved with the council. Obviously, we've seen faces change over the years, but 6, 8, 10 years ago, it was the pension crisis and a lot of the gloom and doom speak. And I appreciate this group and some of the previous groups were really helped work the problem. And now when we transfer those assets, we're one of a very low percentage of funds in the state from a fire standpoint that is handing off a very good product rather than handing off a problem product. So that's kudos to everybody, to the mayor's point.
All right. Thanks, Mike. Okay, if there are no other comments or questions, thank you, Mary, and thank you, Mike. And then we'll return to the agenda, and that will be with the Cemetery Commission and Commissioner Anderson, if you're on yet.
Can you hear me okay?
I can. Good afternoon. Good evening. Hi. Please go ahead.
And members of the Finance Committee, and thanks for this opportunity to update you on behalf of the Cemetery Commission. Could we move to the second page of the slides, please? See if we have a. I don't know if I just see. Is that popping up on your screen? The slide
Not yet. Not yet. There it comes.
All right. Second page, here we go. Good. Mission statement. At the outset of the presentation, we've included our Cemetery Commission's mission statement, which was adopted back in 2013. And our mission remains, unchanged today. Commission work is grounded and directed by the principles in our mission. This succinctly covers our core responsibilities and our stewardship of the cemetery and its resources. So that's there for your reference. Next slide, please. For our financial and investment management responsibilities, our commission is guided by clear guardrails, goals, and targets, which are included in our comprehensive investment policy. Every year, our commission carefully reviews this policy, and we then direct our investment advisor, which currently is William Blair, to follow and conform with the provisions of the policy. And we ask our investment advisor to provide a full review of our investment performance to the commission at each of our quarterly meetings. Our invested assets are intended to fund the cemetery's ongoing operating expenses and to cover all the capital improvements needed at the cemetery, both near term as well as longer term into the future. ideally in perpetuity after all plots and all niches have been sold at the cemetery and the cemetery were to be at capacity. And by the way, we don't expect that to happen for at least 50 years, and likely it's beyond that as well, based on historical sales patterns. Our investment policy has been in place now since 2008, and in this year's review, we dug a little deeper, and the commission determined that some modest tweaks were needed. So we've proposed for City Council review and approval a few changes. Frankly, these are not material changes, but just housekeeping adjustments to update the terminology and nomenclature for investment vehicles and some of our benchmark indices. Also, we wanted to incorporate into the policy the requirement that the commission carry out its reassessment of the financial advisor and the relationship with the financial advisor every 5 years. And that is our practice, by the way, but we wanted to formalize it. So it's actually been incorporated into the policy with these changes. I think you'll be considering this these revisions later. Next page, please. Next, here's a graphic recap of the total value of the cemetery's combined funds. The majority of these funds are currently being managed by William Blair, as I've indicated earlier. This recap compares our total asset value at the end of fiscal 2021, in other words, April 30th of 2021 versus the prior year, 2020, and versus 2008. And 2008 was the year that the commission moved to a more robust investment management approach and retained William Blair at that point. So 3 points of reference here. As of 4/30/2021, our total funds are just under 12.2 million. And as noted at the bottom of this slide, that's an increase of nearly 41% year over year from 2020. And our total assets have increased nearly 4 times since 2008. We've already talked with Mary about this past year. It was an unusual year. The starting point, obviously, the fiscal year coincided with the start of the COVID pandemic, and obviously we benefited from the strong resurgence and the improvement in the economy and the financial markets. So clearly, this outcome is a reflection of that. We're very pleased with this outcome, obviously, but it's not necessarily out of step with overall market movement. And I mean, for our reference here, the S&P 500 improved by roughly 46% during that same period of time. So not unexpected, but we're definitely pleased. I do want to drill down on one piece of our total assets and point out that our total cash, which is on the upper part of the pie chart, our total cash available in these funds was roughly 937,000, with roughly 622,000 of this cash held in city bank accounts. And that's directly consistent with our general rule of keeping cash in city accounts in an amount that's sufficient to cover the full year's normal operating expenses of the cemetery, which roughly range from $600,000 to $700,000 per year. Next slide, please. This next table presents our investment asset distribution. Again, for the end of April 2021 versus 4/30/2020 and versus 2008, and compares this distribution to our allowable asset allocation range and mid-range targets per our investment policy. I would describe our investment portfolio as a balanced and moderately conservative, safe investment portfolio. Cash and fixed income at April 30th, 2021 was at 27%, and that's slightly below our mid-range target of 30% for cash plus fixed income. And frankly, this recognizes that fixed income return rates have been low, and so we have put a modestly lower emphasis on fixed income investments in 2021 as well as 2020, frankly. Our total domestic equities as of April 30th, 2021 were at roughly 53%, just above our mid-range target of 50%. However, I should point out that this proportion has actually come down somewhat from the year before. It was 57%, and that's intentional. Our commission, in consultation with our investment advisor, have decided to move that down so that we're more in line with policy targets. Although we clearly acknowledge that we've benefited from a strong domestic equity market run. Total international equities were at 20% as of 4/30/2021, and that's directly in line with our mid-range target of 20% of the portfolio. It's worth noting on the middle of this page, you'll see a statement. We currently have no outstanding debt at the cemetery. All debt that we incurred in our last round of major capital improvements, mainly the first phase of the build out of the memorial garden and the new cemetery office. All of that was repaid and was completed in 2014, nearly 7 years ago. So no debt in our overall assets or the overall balance sheet. So let's move to the next page. And speaking of capital improvements, I just thought you'd like to know what we're focusing on right now. Really two areas. First, during 2021, we've been working on repairing the cemetery ravines, mainly along the northern border of the cemetery. Much of the most urgently needed ravine embankment restoration was completed in the past few weeks. Although we still need to address further some of the repairs that are throughout that area over the next few years. And the costs for this restoration repair work will be paid from cemetery funds, as well as potential federal and state grants. But the timing for getting grants of this kind may be prolonged. So that may dictate to what extent we're able to carry out, when we're able to carry it out, and the scope of what we do of this work going forward. Second, we hope to embark on the building out of the second phase of the memorial gardens. This is part of the original plan during the upcoming year. This will include needed improvements in the grading and landscaping within 2 out of the 4 garden areas, the ones that are closest to the entrance gate of the cemetery, along with repairing and replacing the bluestone walkways throughout the entire memorial garden. Plus, we will be adding about 400 more niches to the memorial garden. That's in keeping with the original design, so that our total number of niches in the memorial garden will then be somewhat above 1,900. And right now, we're still determining the full scope of this phase 2 work in the year ahead. But we hope to reach a final decision soon, and then detailed plans can be completed and finalized, and then the work will proceed from there. So next page, thank you. This brings us to the close of the presentation. Any questions for me?
Questions from the commission? Comments? Well, I would say well done. That's a great report. Alderman Weber, were you?
Sure. I just wanted to say, John, it's great to see you as a former commissioner. Congrats on the great work, and well done.
Thanks. Appreciate it.
All right. Well, thank you very much.
Okay, thanks.
And we'll move on to the police pension report. And for that, we have Doug Oost from Marquette Associates. So you're there. We'll proceed with the pension fund report for the police department.
Good evening now.
Yeah, good evening.
I was asked to try to keep my comments brief, so I will do so here and start on page 2 of the presentation. And just a reminder of the approach that the police pension fund takes. The first, as commented earlier, it's a pretty risk-averse portfolio with a considerable focus on downside risk. Very efficient portfolio structure. We use indexing in efficient asset classes. try to keep fees as low as possible, and lastly, but not least, avoiding any unintended risks in the portfolio. Now, if you move to the next slide, you'll see the current asset allocation, at least as of the end of the fiscal year. And as a reminder, again, the police and fire pension funds have to hold a higher weighting in fixed income. You can see the target portfolio on the right and the actual portfolio on the left. You can see as the end of the fiscal year, a little underweight to fixed income and overweight to equities. A lot of that due to the run in the equity markets that's already been discussed. The only other thing to point out on this page is that the police pension fund does have an allocation to core open-end private real estate, which does serve as a pretty significant diversifier and a risk reducer in the portfolio. And you'll see more on that when we get to risk and return. If you move to the next slide, performance, as mentioned, has been a very strong year. The police fund was up a little over 25%. Really, the one drawback was actually having core real estate in the portfolio. So it's been a strong performer over the past, but last year real estate was slightly positive, but close to flat for the year. So that was definitely a headwind for the portfolio. Flash forward to this year so far, the calendar year, and real estate's been one of the stronger performers of the year. So that's certainly been a nice tailwind for the portfolio overall. And then the policy benchmark to the right is just the targets from the prior page. And to the question asked earlier, these are the broad benchmarks for each one of those targets. So the Barclays Aggregate Index, the Wilshire 5000, the MSCI ACWI, ex-US, et cetera. If you move to the following page, just looking at cash flows, ending the fiscal year at a little over $43 million. You can see this goes back to at least when we have data available, starting at around $18 million quite some time ago. Slightly negative cash flow during that time period, and then obviously some pretty considerable investment gains over that time period. On the next page, I mentioned the risk return, and again, here we're just highlighting three different points. The first on the far right is the median public pension fund. This is a universe called Investor Force, which as an aggregate universe, there's probably about $11 trillion in assets here. It's an aggregate universe of most of the public pension funds out there. And that's the median of that universe. Just to the left of that, you see the policy benchmark. And then to the right of that, or to the left of that, you can see the police pension fund. Again, roughly in line with the return of the policy and the median public pension fund, but considerably less risk over that time period. Again, a lot of that's due to the asset allocation that we talked about earlier in the presentation. On the next page, just looking at fees. Again, the idea here is to keep fees as low as possible throughout the years. And a lot of that is from keeping investment management fees down through indexing. I'm happy to answer any questions that anybody has. If not, I'll stop there and again, stick to my promise of keeping it brief.
Yeah. Questions from the committee? Comments? Observations? Apparently not. That's a quick and very informative presentation. So thank you very much. And we appreciate all your hard work, and I'll probably see you once more before the consolidation. So look forward to seeing you then. All right, thank you. Okay, moving on, talking about the consolidation, we're gonna turn to Director Holub, who's gonna give us an update on the public safety consolidation that's underway at the state of Illinois. So, Director Holub?
Thank you very much, Chairman Morris. We thought this was a perfect opportunity to update you on the topic of public safety pension consolidation, having just received the investment fund presentations from both police and fire pension boards this evening. So 346 days and counting. It's getting closer and closer to the statutory deadline of June 30th, 2022 for the consolidation to occur. Diane, you can go to the next slide. Just by way of background, in 2019, Governor Pritzker created an Illinois Pension Fund Consolidation Task Force. The group was to look at the broad pension challenges throughout the state of Illinois and offer recommendations for the legislative bodies to consider at the state level. They issued their report in October of 2019, and their recommendation as part of the task force's work was to consolidate both Article 3 and Article 4 investment assets into two new investment funds, Article 3 being police, Article 4 being fire. The goal of the task force was to improve investment returns by consolidating those investment assets and to also reduce costs with all of the local pension funds incurring investment management and investment advisory fees. The thought was that at a consolidated level across the state, those costs could be reduced, thereby boosting investment returns net of fees. As a result of the task force report, Senate Bill 1300 was introduced during the fall veto session of 2019 and was passed. Going to the next slide, Diane. That was Public Act 101-0610. It was signed into law by the governor in December of 2019. Took effect just days after his signature, effective January 1st, 2020. The Public Act set forth that transition boards would be appointed by Governor Pritzker, and they would serve for the first full calendar year under the Public Act 101-0610. That transition board, those boards were appointed by the governor on January 31st of 2020. And I was very fortunate to have been appointed by Governor Pritzker on the transition board for the Police Consolidated Fund. So I've been very fortunate to have a front row seat throughout this consolidation process. Set forth in the Public Act is that permanent boards must be elected and seated by January 1st, 2021, therefore setting a very strict agenda for the transition boards to conduct those elections and have those permanent boards elected within the first calendar year. The Public Act amends the Illinois Pension Code, and as stated, it consolidates the assets of 353 Article 3 pension funds and 96 Article 4 fire funds into two consolidated funds for investment purposes. It's important to note that this did not create two new state pension plans. They are much more similar to IMRF than the 5 state pension plans, in that the permanent elected boards provide the oversight and direction on the investment of these assets. And that permanent board is representative of both beneficiaries, participants, and municipalities contributing to those Article 3 and Article 4 funds. To give you an order of magnitude, in fiscal year 2019, based on the Department of Insurance data available on the state website, the Article 3 funds were $8.9 billion in assets for fiscal year 2019, and the Article 4 funds were a combined $6.4 billion. So you can only imagine, given the growth over the last year, that those investment assets will have grown significantly since that time. It's important also to note that under the Public Act, the local fund boards do remain, and those local boards will continue to make benefit determinations, and they are still responsible for administering benefits. So the cash management point that Mike Mounts made earlier is very important, because those local boards must be able to access those assets and maintain a cash flow that will be sufficient to pay expenses and benefits of the local fund. Next slide, please. Elected boards, as I mentioned, were all seated as of January 1st of 2021. I just, have provided you the names of the current board for both the Fire Pension Investment Fund and the Illinois Police Officers Pension Investment Fund. You will see too that I have been elected and serve on the elected board for the Police Investment Fund. As I mentioned, the makeup is set by statute. So you have both participating, so P, participants, active participants of their local pension funds, participating, as well as beneficiaries. So the Bs indicate those currently receiving a retiree pension from their local pension fund. And then you have municipal representatives. Those denoted with an M are elected by the municipalities to specific seats on both elected boards. And then IML has a representative, Illinois Municipal League, and Brad Cole, the executive director of the Illinois Municipal League, serves on both fire and police boards. Next slide. Transition period. So the Public Act set forth a 30-month period, January 1st, 2020 through June 30th, 2022, to accomplish the full consolidation of all investment assets of the local pension funds. So the critical functions during this transition period, one was to elect the permanent board in the first calendar year, which is done, provide statutorily required training on the consolidation, communicate with local pension funds, municipalities, and other stakeholders throughout the transition process, and to accomplish the transfer of all local pension fund assets into either of the two consolidated funds by June 30th, 2022. In addition to that, these boards are having to create new entities, new organizations. So offices are needing to be created, staffing, infrastructure to the investment fund, and development of policies and procedures. So quite a lot of work being done behind the scenes. Next slide. So I'll go ahead and move through the transition and asset transfer process. The next slide is borrowed from the Fire Pension Investment Fund. I'm not going to go through it. The point here is simply that a lot of things have to happen over the next now less than 1 year. Fire Pension Investment Fund has kind of created a mobilized, prepared transition process. And this kind of walks through a timeline of their plan of bringing on important participants in the process and getting the assets transferred. Next slide, Diane. There's also an accounting and auditing function. So there's several audits that are discussed in the Public Act. First, the funds themselves, the consolidated funds, are entities that are required to have fund financial audits. The year corresponds with the state fiscal year, so it goes July 1 to June 30. So the fiscal year 20 financial audit is completed for both consolidated funds. It was a 6-month period of January 1 to June 30th, 2020. Very little activity during that 6 months. And so not a lot of, finances to audit. It was pretty simple. The next fund financial audit will cover July 1 of 20 to June 30th, 21. Neither consolidated fund anticipates having any assets transferred to the consolidated funds prior to June 30th, 21. So this will be more of the organizational development, the hiring of staff, contracting for service providers, and having the financial audit for those operations. The fund financial audit for fiscal year 2022, all of the assets should have transferred in that fiscal year. And so that will be a significant financial audit undertaking for fiscal year 22. The other types of audits that are taking place is that there will be audits of certified asset lists. Each individual local fund will prepare and provide a certified asset list, which will be audited by the consolidated fund prior to the transfer. And then the final requirement is specifically called out in the box below from the Public Act, that a transition audit. So within 6 months of the full transition of the assets, each consolidated fund will have to undertake a transition audit for the entire transition and consolidation process. Next slide. Investment functions. Both elected boards are having a lot of discussions and a lot of work around developing the investment infrastructure for the consolidated fund. Developments of investment policies, the asset allocation, determining what portion of the portfolio will be active versus passive management. And you can see that the general process is similar between fire and police, but as you can imagine, with two separate boards, they're not going about it at the exact same time or making the exact same decisions. So these funds will not be identical. but they will be similar. So each fund has appointed a chief investment officer, and both have now brought on board a general investment consultant. You heard from Doug at Marquette Associates earlier this evening. Marquette Associates has been appointed the general investment consultant of the Fire Pension Investment Fund. In April, the police fund, Police Consolidated Fund, appointed Verus Advisory as the general investment consultant. Similarly, a custodian is very important, critical in the transition process. Northern Trust has been selected as the fire pension custodian, and State Street has tentatively been appointed the custodian for police. That contract is scheduled to be ratified at the board meeting this Friday. Both funds will appoint and select transition managers to assist in the transition process and after the consolidation. And then it is anticipated that additional accounting and consulting services may be needed by the pension funds as they go through the process. Next slide. Transfer of assets. So clearly a very key aspect to each of the local pension funds and municipalities is when these assets are going to be transferred, preparing for that transfer, and then being supportive and assistive to the consolidated fund in the transfer process. So on the fire side, as you heard from Mike Mounts, the transfer date for the Lake Forest Fire Fund is November 1st. Fire Fund is going to do it in 4 tranches, a set October 1, November 1, December 1, and then January 4th. I believe it's the first business day of 22. And so our particular fire fund has been scheduled for transfer on November 1st. Illinois, the Police Pension Fund is hired a consultant as a transition architect. There was a board workshop on April 9th, and they are working now to develop the policies and procedures for the transfer of assets. So we do not know the specific transfer date for Lake Forest Police, but we do know that police also, similarly to fire, anticipates having the on several different dates, not trying to accomplish the transition of all assets on a single date. Next slide. Post-transfer. So there's a lot of policies and procedures being developed on the ongoing operations post-transfer. We've heard now about cash management. That will be very key to the local pension funds, how they will withdraw and transfer money to and from the consolidated funds. Actuary selection. So an important point of the Public Act is that the elected boards will be responsible for hiring an actuary and providing an annual actuarial report to each local pension fund under its authority. So the elected boards will need to develop actuarial assumptions and complete an actuarial study in order to provide those annual actuarial reports. Monthly financial reporting will be very important to how to value these assets each month and provide a monthly financial report of the investment assets by local fund to the local pension boards, year-end financial reporting and audit procedures, and then pension funding implications. So how will actuarial assumption changes from the current legislative requirements and actuarial assumptions? How will those changes be amortized over the next few years, and how will that transform into funding requirements for the local pension funds going forward? Next slide. Any questions? I know that's a lot, and we'll certainly brief you each quarter at your finance committee meetings on the current status, but we just thought it made perfect sense this evening to kind of provide you a status update and overview. So happy to answer any questions you have.
That was certainly a lot. Go ahead.
This is Alderman Preschleich. Thanks, Elizabeth. Appreciate that. I know this was a lot going on, but I'm just kind of curious. Can you just talk big picture? What's changing in terms of decision rights at the local level versus what's going to be consolidated around these funds? And you know, in particular, asset allocation. I mean, it looks like, we're going to keep the same portfolio, but these assets that are custodianed here locally are going to be, transitioned. And I imagine there'll be some audit work and some valuation work that needs to happen. And they get I guess an NAV or some capital account at the larger funds. And then do we all get the same exposures as a municipality, and those degrees of freedom no longer are kind of vested at the municipality and the local board, and it's purely just funding decisions that we have? Is that accurate? Or if I'm missing something, can you please kind of fill in the dots?
All excellent questions. So to your first question, what changes for the local pension boards? They will no longer have authority to determine how the local fund assets are invested. So all the investment authority will rest with the consolidated fund and the elected board of the consolidated funds. To kind of compare how it works now, investment restrictions under state statutes differ based on your pension fund size. Because both Lake Forest Police and Lake Forest Fire exceed $10 million in assets, we have the 65-35%. So up to 65% can be invested in equities, but 35% must remain fixed income. And so those limitations won't be placed on the consolidated fund. So the elected boards of the consolidated funds may well invest a greater percentage in equities and a lower percentage in fixed income investments. And that will certainly change Lake Forest Police and Fire, but imagine the dramatic effects this will have on local pension funds smaller than 10 million, because they've had much greater fixed income exposure in their portfolios. And so their returns have really been limited. So I think the dramatic change will really occur in the smaller pension funds, seeing much better, much improved investment performance than their current restrictions have allowed them to do. As you can see, we have very qualified, excellent investment management for both of our local boards. So it will be interesting to see how those returns play out and how those fees play out going forward on a consolidated basis. But yes, to your specific question, the local pension boards will only have authority to determine pension benefits and administer pension benefits. They will no longer dictate what types of investments or the investment asset allocation for the local fund assets.
Okay, and just to follow up on that, so I mean, there could be some potential benefits on access to different types of investments for our community. We also could potentially gain economies of scale on some, some basis points on these products in terms of fees. So, I mean, we're going to be losing maybe some discretion on asset allocation and engaging in our own consultant, but there's some positives here for us as well. Is that a correct statement?
Yes, I definitely think there will be positives. And I think the other aspect is both boards are discussing the transition of assets that don't transfer very easily. So you heard about the exposure of real estate with Marquette and the pension fund. How easily will that transfer? There are small local pension funds who still have insurance contracts in their investment portfolio that has a specific individual named. And so those are the broader questions, the more difficult transition issues of how do those assets transfer over? Do they stay an asset of that local pension fund, or does it go into the commingled investment fund with everyone sharing a percentage allocation to the total pool?
Thank you.
Very good. Alderman Bushman?
Director Holland, if I could take Alderman Prushleck's questions a step further. And you mentioned that the transition board or the investment board will be making allocation decisions. The actual investment management, is that going to be done through retained fund managers? And I suspect because of the size of the funds we're talking about, there'll be multiple of them. But could you talk a little bit more about the decision-making process for what investments are in fact made?
Yes, you're absolutely right, Alderman Bushman. The consolidated elected boards will make the decisions for all the local pension fund assets as to allocation strategy, investment managers, and again, the proportion of the consolidated fund that is actively versus passively managed.
Very good. Any other, Alderman Rummel?
Elizabeth, is there a blueprint for this from other states who have accomplished this already? And so can we in any way sort of project the advantages or what increase in income we could look to get out of this change?
Sure, it's fabulous question, and there is no blueprint for this. So there is no example of another state that took local pension funds and transitioned them into a statewide investment pool. So that was something that came as a surprise to both transition boards, myself being on the police transition board, was that there wasn't a roadmap to follow. And so it was a definite learning process of just trying to figure out the best path forward. But certainly the task force, in looking at returns of statewide pension plans versus local pension plans, felt there was strong indications that a larger consolidated fund would perform better overall than the smaller local funds. And I would say, while we have a timing difference, IMRF is on a calendar year, whereas police and fire on an April 30 year end, consistent with the city's fiscal year. There is argument that a larger plan can perform better. And then again, they will have less restrictions than our local pension funds do currently.
Very good. Any other questions?
I just want to thank Elizabeth for taking on this very significant responsibility that's not part of her normal job description. And as you could see, there are only 4 or 5 other people like her in the whole state of Illinois, and we have the privilege of having a front row seat and outsized influence in the process as a result. And there were some of us who worked very hard to make sure that Elizabeth had that opportunity, and she's done a great job with it. So we're very, very fortunate to be in this situation.
I see you're providing some gender equity in that police pension board too. All right.
Lucky to have her.
Yes, we are.
No, they are.
Yeah, well, we are too.
And they are.
There they are. All right, thank you. With that, we'll move on to the next item on Elizabeth's agenda tonight, which is proposed bond refunding. So Director Hub, please proceed.
Thank you again. I'm sure you all have fond memories of the December 2019 bond refunding, which went extremely well for the city. We were lucky. The timing was just perfect, and we generated significant savings with that bond refunding. We are back to present you another opportunity. In this case, it is the city's 2013 bonds. That issue was not eligible for refunding in 2019. So that call date is December 15th of 21, the current year. And so it was not eligible for refunding when we did this in December 2019. So we've continued to track this to see how it might do in a refunding this year. This is on your city council agenda. Originally, this was just going to be an informational item, and we thought that we would bring these to city council agendas later in the year. But as you heard from Mary, there is some concern that interest rates may begin to rise. And so we would like to take advantage of time to the extent possible. So there is a brief presentation planned for the city council agenda this evening. And we'll be asking your consideration of first reading on the bond parameters ordinance. So I'll be happy to answer questions now or when we do the presentation in the city council format.
Questions, comments? If not, I'd like to be able to recommend that we proceed with the bond refunding. Any disagreement with that? If not, Director Hub, we recommend you proceed, but we'll talk about it in the next session. So, all right. And then we move on to the last one, which is the budget calendar for next year. Please go ahead.
How can we already be talking about developing the fiscal year 23 budget?
Yeah.
The next time you meet as a finance committee will be the third week of October, and staff will already be well into the process, at least from a revenue and capital standpoint. So we typically bring this to you at your July meeting. And as you can see from the material in your packet, we're not proposing any change in the process or timing of the budget development. We are currently anticipating a budget workshop in November on an off meeting Monday, similar to what we've done the last few years. That would be November 8th this year, Monday, November 8th, and an operating budget workshop in the second week of March, similar to the last few years. That would be Monday, March 14th. So November 8th, 14 being the significant dates for budget workshops. But happy to answer any questions or receive any input you might have globally about the budget process for fiscal year 23.
Questions, comments? Well, if not, I'd like a motion to approve the fiscal year 2023 budget calendar. So motion?
Second.
Director Hall, you want to take a roll call?
Certainly. Mayor Pantaleon?
Aye.
Chairman Morris?
Aye.
Alderman Karas?
Aye.
Alderman Rummel?
Aye.
Alderman Notes?
Aye.
Alderman Preschlack?
Aye.
Alderman Goshgarian?
Aye.
Alderman Bushman?
Aye.
Alderman Weber?
Aye.
Thank you.
Aye.
Thank you. Very good. That brings us to other business. There was attachments in our packet about the June flash report and other agenda items. Any questions about those or comments? Very good. At this point, I think we have an opportunity for the public to address the Finance Committee. In this case, you could call, it's on the screen, 847-810-3643, or you can use the raise hand icon at the bottom of your screen to bring a question to us.
Mr. Chairman, there are no raised hands at this time.
Okay.
Mr. Chairman, we have no callers.
Okay, I think we got everybody up to speed. That brings us to the adjournment of the Finance Committee meeting. Could I have a motion to adjourn?
So moved.
Second?
Second.
All those in favor?
Aye.
Aye.
Opposed? Very good. We'll take a 5-minute break for drinks and comfort stations, and we'll see you back here in a little bit with our mayor. So thank you very much.